right, let's get started. Welcome, everyone. We are here for the grand finale of our online May-June GLS speaker series with a real treat to round this off. So Reshma Sohoni, she comes to INSEAD in 2002, I guess, Reshma, in the still in the shadow of the dot-com bust.
Yes.
And yet by 2007, she is going on to start Seedcamp, which will become really the leader in venture seed financing in Europe. And we're going to hear all about that. I'm going to be joined on the webinar today, as you see, by Daniel and Nancy. Daniel, Italian-American, Nancy coming to us originally from Australia. And they'll be pitching questions at you. So it'll be a regular fireside chat format. I'll warm things up, help us get to know Reshma, but then you on the audience should be logging into Zoom, questions that you've got, and Daniel and Nancy will voice for you. So here we go. All right, so Reshma, what do you do? What does a week look like for you in May, June, running Seedcamp, raising money, dealing with the pandemic hitting your businesses?
Yeah, I mean, firstly, of course, you know, what a privilege to be here with you all, and thank you for making me a part of this series. Really honored, and yeah, I mean, I think, gosh, I guess it's not a May or June, or frankly, a year we've really ever had. Even though, you know, as you said, started Seedcamp in 2007, but before that, I'd been through the dot-com crisis as well. But this is uniquely different. And I mean, I think, again, and before I get into sort of the week or what a typical month looks like, you know, I am American. I came to INSEAD as an American. And obviously, I just, you know, I kind of want to say it's a very tough time over there right now. And sort of our thoughts go out to the communities affected in the US. And we've also, I think, we've also been thinking about how do we be a voice for good, because I think we do have power, and I think the venture capital community has power. So I hope in the coming kind of weeks and months we use that power well. And I know we'll get into that discussion over the hour. But back to the question at hand. I think, you know, I think one of the things that probably make us successful, and I think you see this sort of throughout the 12-year journey, is we do tend to keep things simple. So I think our day, our week, month is sort of boiled down to really what is the core of what venture capital is, or what our jobs are. And it's really three things plus one, which is you source companies, you're hunting and gathering all the time, right? Back to the old days. And you're selecting, you're really trying to use judgment as to what you think matches your strategy as a firm. And then a lot of time is definitely spent supporting our companies as well. And then the last bit I'll say is definitely kind of, you know, as the kind of co-founder and one of the leadership team, definitely a lot of kind of our own team management and culture, and so there's time, you know, allocated to that. And probably plus another new one is our own fundraising for our Fund 5. So yeah, my week or month is really split into sort of the early stage companies, that process of getting them in, some of our late stage companies as well, which will really drive what you can't forget at the end of the day, which is your job, which is a fund manager, and you know, returning capital and making your LPs successful. So some of that time is spent on our late stage companies as well. As I mentioned, sort of team topics, I think particularly May or June is a lot about remote working. How are we all feeling? Mental health, you know, which I guess a bit less sort of in focus when you can see each other physically in the same space and kind of have those conversations.
So let me flag a few things for that we can dig into in just a little bit. But one is, of those three activities, it'd be interesting to hear which of them might get easier in a virtual world, which of them get harder. And secondly, of course, I think people will be interested in what is the fundraising environment like for you currently. Yeah. But before we go there, just so people get to know you, tell us a little bit about the origin story for Seedcamp. If I talked to you when you graduated from INSEAD in 2003, would I have heard about that? Would that have been clearly in the cards for you?
I think partly yes, and partly mostly no. In that I came in from New York, and at the time I'd worked in investment banking post undergrad at UPenn, and particularly chose INSEAD because having done Wharton undergrad, I was, for sure I didn't want to go into a 2-year MBA program, and I wanted that international exposure. So came to INSEAD, but I'd actually worked in venture capital at SoftBank, which is an interesting brand these days as well. And it had been, I mean, when you fall in love hard, and I loved it. I mean, everything about it sort of said, this is where I belong. I was meant for this, but I also realized I actually didn't bring any experience to the table. I had no operating experience in my early 20s doing it. And venture capital is such a funny thing where you could do this job at age 90, 70, 50, or 30. And so, do you really want to do that when you're in your 20s or so? Because it is almost career ending as a job. So I came in with all that baggage, kind of thinking about it. And so after INSEAD, I was determined to get an operational role to if I did end up back in venture capital one day, that I could be useful. And so I went to Vodafone for several years, and particularly chose a European tech company. My undergrad too was tech and business. So I knew that was my path, was tech and business. I think seeing the .com boom made you kind of, if you were at the forefront of that part of that, I think you never looked back because you saw the future very clearly. It wasn't the right time for things like Webvan and pets.com, but you knew that it was going to be the future. So
and what about Europe? What led you to pivot to Europe? Not obvious in 03, 07 to go down deep.
Not at all. And I think actually coming to INSEAD, I had a round trip ticket, in that I was like, that's cool. I did my MBA in Europe. I met some great people, had some fun parties, and then I'll just go right back to New York because my family's there, and I had a job waiting for me, and so forth. But as is INSEAD is special, I think the courses, the people you meet, you kind of delve deeper, and I just realized there was so much opportunity here, and I think a year would have felt to me too short. Hence the Vodafone experience of saying, okay, I want to really dig in deeper into the European footprint, into what was an incredible company at the time. Telecoms in Europe was absolute sort of leadership position, and it was that experience. I got to literally work across markets, Spain, Italy, Sweden, etc. And towards the end of my time there, helping Vodafone Japan turn around, and then we sold it off actually. So, and that amazing kind of operating experience mixed with a bit of strategy. And that's the thing. I think visiting all the places, working in those geographies, I saw that there was so much talent, so much opportunity, yet only the telecom sector was doing anything in Europe, and where was the rest, right?
Yep. And what was it that led you, instead of going into an existing structure, what is it that led you to start your own thing? And a few questions around that. What led you to do your own thing? What led you to focus on Seed then? And just sort of briefly, the original idea, how similar is to that to what you ended up building?
And interrupt me please if I kind of veer off on a tangent, but there's actually a period, 6 months between Vodafone and starting Seedcamp up, which I ended up at 3i. Very venerable firm, sort of steeped in private equity, but they had a venture arm, and that's what I joined. But clearly, given my time frame there of lasting 6 months, it was sort of clear that they were more private equity. I was definitely more venture, and actually, it was a really bad culture fit. And it was certainly shocking to me. That's never happened to me before in a job. But I think I was also reaching a point in my life, and to tie this back to, I think all of us, I mean, if you're in an MBA program like INSEAD, you have a world vision. I think you have, you map out a future in mind. You have a sort of view on the way the world works. But I think what all of us who get jobs after INSEAD don't do necessarily is put that worldview into practice. We sort of go into an organization and put that worldview into practice, right? And I was forced in a way to be courageous because I essentially got fired from that 6 month.
You had a brilliant plan. You did the work in European telco. You got the institutional job, and then train wreck.
Exactly. So it didn't fit for so many reasons, and I think that's where you're pushed. And I think kind of a thread in my career too is networking, which again, INSEAD's incredible opportunity to do that, right? And I think I took full advantage of it for sure across Singapore and Fontainebleau. And so I was fortunate enough during that 6 months, I really got to know the venture scene in Europe. And there was, and TechCrunch was getting founded actually at the time, which has become a massive publication now. And the founder of TechCrunch actually introduced me, we became friends, and he introduced me to some key people. And, I think throughout your career, there's also sort of different people that stand out. And that definitely stands out as, introducing me to the great and the good of the venture community. And so Seedcamp was this idea that Saul, my co-founder, had coming out of Skype and watching what was happening in America with Y Combinator starting a couple of years before, and Techstars, and it, things happen because you speak to each other, you collaborate. And so we got to talking and started kind of noodling, brainstorming, et cetera. And that's how it grew from there. But I think I quickly realized, probably getting fired essentially, that this was make or break for me. Either I had to go full in, act like an owner, and really just take this forward, and not treat it like a job. I think that was sort of the biggest kind of eye opener for me, because I think natural entrepreneurs just have that, and I needed to kind of have a wake up moment to feel like an entrepreneur.
Cool. Why don't we flash forward to the present again? As we explore the present, I'm sure we'll hear more about what's up at Seedcamp. But I mean, maybe going back to that question about how you're living today.
Yeah.
And you'd laid out these three things. You're hunting, you're selecting, and you're supporting. How's that? And of course, raising money. Interested in that as well. How is the virtual world making the elements of those easier or harder?
Yeah, I think on the sourcing side, our job is probably not as badly impacted, in the sense that when we meet founders, they are often in a garage, or in a proverbial garage, or it's just definitely a few of them. There is no culture there. There's no team there, really. So I think in terms of kicking the tires of when you can visit places and see the founders in action, all of that, which the later stage investors have to do, we don't have to do that. So I think that part's easier. But what's harder is everything we do in terms of selection is based on people. And so we're not getting the feel of that person-to-person connection. That human kind of, that human relationship is such that you have to now do over video. So we've definitely made some tweaks, like just because I think tangible actions help. We can sometimes meet a company, sort of a couple of founders at a time or whatnot. So one of the tweaks we made is for the partner pitch, the final partner pitch, every team member has to be on, because what we were finding, our decision-making was slowing down because we were meeting some of these founders sort of one piecemeal. So we're making tweaks as we go along. So the sourcing side, I think that's the biggest challenge. On the selection side, it's been amazing actually. So one of the things we do is our LPs are actually angels and VCs themselves. And so we invite them to London every 4 to 6 times a year to help us with Q&A and kind of not selecting, but curating some of the final sort of companies we're looking at. And, we were really petrified of trying to do this on Zoom, because how do you replicate that sort of lunch break and the coffee break and the chitter chatter of some of the LPs going, hey, look, I really want to come into this company with you guys, that sort of sidebar chat. But what's been amazing about the Zoom is a bunch of our LPs are also in Asia and US and so forth, and they can't come to London. And so they've been more passive, but now because of Zoom, they've been able to get much more active. So we've literally doubled the audience we can have, and they continue then to, of course, do Q&A with us and so forth, more digital. But so I think, and And then support too. We again do a lot of things physically, events wise. We move them to one of our companies called Hopin. Actually, if you want to do large scale events, that's a great place to
They're doing well, huh?
They're doing extremely well, and we can get into portfolio kind of a little bit later. But yeah, so we've tweaked, and I think again the nature of things is I think we've looked at what are the pros of what we can get now with this more digital platform, and try our best to solve the cons, which mostly have to do with, I think, the chit chat. Really.
So I guess people often, obviously, when you're looking to what's going to sustain, what do you think will shift in what you do? That is, will you go to a more hybrid model where you will have more virtual LP events? What do you think? What kind of lasting changes do you anticipate for Seedcamp?
Absolutely. It's going to be a mix. It's going to be a mix, I think, across the board from our team as well, going into the office, how often, and all of that, all the way to all of these events and so forth. So yeah, I think we miss not to incorporate this shock.
Cool. So a number, I'm sure many people listening are in the back of their head or even in the front of their head thinking about, is this a good time to start things? Now, so what are you seeing in terms of funding? Is there going to be seed funding available from people like Seedcamp? Are you going to be able to still close your next round? And what are you seeing just on the venture funding side?
Yeah, I mean, basically our model as a seed pre-seed fund is to roughly do about 35 investments a year. So, which means every week or so, every 10 days, we are making a new investment. And now we've been offline remote for 3 months. So yeah, we've made multiples of new investments, but we're absolutely conscious about what downstream capital does look like, because what's the point of investing a few $100,000 in companies to then hit a wall after us, because because our companies after that few $100K to $1 million or so will need to raise capital 9 to 18 months from that point. So we're very thoughtful of what that capital downstream looks like. And I'll say in Europe particularly, there is a lot of dry powder. So there is a lot of new Series A, B money. It also is getting much more conscious about where it puts its money as well. And what I'm seeing is there is a flight to quality for sure. Actually, some of our pre-seed seed deals are getting far more competitive because there is so much money. And I think some of the Series A folks are going earlier stages as well, because I think it's been shown the last 5+ years that access really matters. Getting in early really matters. So it's actually weirdly very competitive in very few deals. And I think for the listeners, I think that's the key takeaway there is you will hear more stories about it being difficult to fundraise, generally being challenging, but very few companies are getting to really choose who to take that money from. So clearly that's where you want to be, is in that position.
Very good.
But, with interest rates down, or non-existent, and there's just not other places to put capital.
Maybe talking then about, as you said, about portfolio. So are there, what sectors are you seeing that are interesting? Obviously, there's some obvious ones, but even naming some names, because often people are looking for interesting scale ups to approach for jobs and stuff. And anyway, so just curious what if you have anything to share on portfolio and sector.
Absolutely. I would say, I think in anything, probably from us, you get, especially me, I think you get a view of it's always 10 years out, always 20 years out. So we're really not looking at short-term trends, except for how they inform long-term trends. And so we've been very active in already seeing kind of future of work as a massive theme that there was a whole host of things being changing dramatically. And I think, places like San Francisco and London were already extremely difficult to live in the last several years. And obviously through the pandemic, and what's happening in the US in general, those places have gotten more difficult to live in. So there were these themes already the last couple of years that we were investing in terms of kind of remote payments. So the whole kind of, how do you pay people? What are the laws in different countries? And so kind of remote payments, just remote definitely collaboration tools where, and Hopin obviously came out of that. So a lot around future work, and even things like we have a company called Peppy that allows parents, particularly mothers, to get back to work faster after having babies. And what we found interesting was employers are willing to pay for this more. So that's also part of future work for us, is like, how's the whole employer-employee relationship changing? So we really took like a full stack of like office space all the way to these other elements. And so it's multi-trillion-dollar sort of market size for companies built there, right? And so that's one. Health tech as well. We've been active investors for 4 or 5 years now, because again, I think there is a secular trend around more personalized health, more measured. What you measure, you fix, as we know, across sectors, disciplines as well. So I think, and there was this interest for disposable spend on health as well, health, wellness, capture all of that in kind of budgets being taken from alcohol and food and entertainment into more wellness and health. So I mean, those are kind of secular. People talk about secular trends, and so we've been seeing those for a while, and it is been a fortunate kind of time in the pandemic that all of that has been exacerbated,
Yeah.
and a little fire's been lit under those
That's
things.
great.
So, yeah.
So it's always good to see those bright spots. So maybe just double click on Hopin for a second. So just really quick, what's their elevator pitch? And also, for MBAs, and would that be a kind of place one could look for opportunity?
Absolutely. I mean, so we have a talent pool actually that we keep on Seedcamp, and so do several VCs as well, to showcase what are the companies that are hiring. So absolutely look at our postings on that. But yeah, I mean, Hopin we invested in 6 months ago, and it's gone from zero to multi-millions in revenue in that time, right? And so essentially they allow larger events to happen. So not Zoom and not replacing or adding to conferences, physical conferences, as you can imagine. And it grew, we really look for founder market fit. And when we met the founder, kind of his pain point on attending events, and both from who he is as a person, but just logistics, all of that, and a real kind of environmental bent to how he was approaching it as well. And the beauty with which kind of he was building this product, all of that, we were literally in the meeting. It was a 45-minute meeting. Within 20 minutes, we said, please take our money and how can we help? So it can happen that fast, right? And so.
Nancy and Daniel, just a heads up, I'm going to call you out in a couple minutes. So I just have one last thing for Reshma before we open up. As you've woven in, you're clearly quite passionate, not just about venture capital, but again, about the impact you can have on the world. You started by, talking about some of the racial issues in the US, but also, some of the investments in allowing women to get back to work earlier, and such. Just maybe on women in tech, how important is that issue for you? You went into tech pretty early as a woman in Europe. Is that something you personally look to make a difference on? And how do you think about making a difference in what's sometimes a pretty challenging topic?
It is. And I mean, I think if anything, kind of what's, the racial issues coming to light in the US even more so than they have in the past several years. I think what, all of that sort of tells us is, again, what you focus on and what's top of mind and what constantly gets brought up is what you will work on. And so I think in a way, being a woman in tech, it's a topic that is constantly sort of brought up to me. And sometimes, I mean, human beings at the end of the day, sometimes you're like, I don't want to talk about that. I just want to focus on being in venture. But it is important. And I think we do, we do a few things. I mean, we support different organizations that are trying to get all kinds of kind of minority groups more into venture capital. So that's one. I think it's difficult, but I do go out and just talk a lot and be seen, right? I think role models are important, and I know I get asked a lot, and I have to say yes a lot more than some of my female friends do, so. But it's challenging with two kids, right? And trying to be a mom as well. But I know it's important. So I mean, there's little bits like that too. Of course, backing female founders as much as we can, thinking about things like how do we get women back into work so that having a child doesn't become a career stopper or a promotion stopper. So yeah, we're working across small and big.
Great. All right. Well, Daniel and Nancy, let's see what's coming in over the wires.
Great. Thank you for having us. We're excited to be part of the conversation. And for all attendees, just so you know, you can click on the Q&A button, and there you can ask questions, see questions that are being asked, and vote to surface any questions you want the answer to. So going from questions that have already gotten a lot of traction, Reshma, people are interested to hear what you think is the single most important factor for a successful founder.
Wouldn't it be so easy to boil it down into that? Yeah, gosh, it is a tough one, but I will say it's sort of a package, and I think for the most successful founders, which we love to work with, I think it's been a little bit of kind of a schizophrenic sort of person in a way, which is you're extremely passionate, and yet you can sort of take a step back and think about building culture, what kind of team you want to build. You're incredibly sort of judgmental, or have, again, have a world vision that you're pursuing because you're a founder, entrepreneur, but yet you can listen when there are cogent arguments against whatever point, whatever particular view you have. So I think as a founder, you're always balancing. I think when we see that perfect dance being done, I think that catches, our eye. But I think sort of qualities like that, the hustle and the grit, I mean, I think, compared to anything else. But again, our founders, being tech founders, generally also bring in incredible depth of tech expertise. So they are hardcore engineers, and they've gone to some of the best universities out there and are working on some pretty cutting edge PhD work or whatnot. So I'm sorry, it is a package, and you kind of have to be excellent at a number of things.
Makes sense.
Awesome. So now there's a bit of a tricky question for you. So let's see how we go. Approximately what percentage by number of your investments would you put into the following buckets? Number 1, stars with significant money multiple return.
Yep.
Number 2, okay or money back. Number 3, write-offs.
Yeah, it's a great question. One of the things we do early on so our fund life cycle is often 10 years for most VC funds. Us particularly, we only invest our first check in the first 3 years, which is a bit different than most VC funds. Because we are pre-seed seed, there is a longer gestation period. And then the last 7 years are really for follow-ons and obviously returns in that kind of relative time frame as well. So one of the biggest things we do actually is pretty much a year after and we break it into cohorts, year 1, year 2, year 3 cohorts. And after year 1 cohort, a year and a half has gone, we start ranking them. And so ultimately with our 3 years of cohorts, and we have a budget for follow-on based on cohorts as well, so that we don't spend it all, quote unquote, spend it all in the first year companies. And so we tier them into 3 tiers: top tier, middle tier, bottom tier. The bottom tier usually kind of finds itself in the first kind of 9 to 12 months because they just can't raise the money. Literally, users have told them they won't pay for anything that they're building, like no product market fit, can't raise money, founder fallouts, bunch of that. So then you're not putting your follow-on capital in that really, and you're avoiding that as much as you can. And then the top tier tends to find itself out as well, because they're the ones hop in. It's like gosh, that 6-month hockey stick. They're able to raise money from tier 1 investors. We really look to get our companies invested by the same kind of indicators that we tend to be hopefully for our companies, which is, hey, I've got Seedcamp, I'm on a different trajectory. Hey, we've got sort of Sequoia, Excel Index, Bulletin, et cetera. We're on a different trajectory. So the top third brings itself out in that. And then there's a middle third. It's a big group, and that's harder. And those are the ones where a lot of our time also is spent to see, are they going to pop out and join the top third, or fall out into the bottom third? And we again are very thoughtful where we deploy our follow-on money into that. I think that's useful context, because I think it's different, and I don't know if all VCs are think about it quite this structured. So I think it's just goes to show what kind of a VC we are. So back to the question. So really, our top probably 50% of our companies will be a write-off. Less than 1x, to be honest. And then another kind of 30% of the companies will be sort of 1x or more. But I think if you look at us, we don't even, you hear typically VCs go, I want a 10x, I want a 10x on this company. And for us, that's not even, it won't even return funds for us. So we are looking at like 100, 300x return on kind of complete money into a particular company. And therefore it's really the top 20 companies then that make the difference. Within that, it's probably the top 10 to have some shot at the fund level return. And then 2 or 3 that will blow it out. And TransferWise, which I love because it's Tavit and it's a fellow INSEAD. We're still in it. We actually sold our LPs. We switched LPs sort of from 20 to 1 LP, but we've kept the analysis going of what TransferWise is doing for us. And I think that will return 8 or 9 times our fund, just one company, right? So again, we're very different to be shooting for that kind of sort of numbers and multiples. And our first check into some of our companies is now on paper at 2,000 times our money in. So yeah, it's just, so I think if you're going to enter this world, I think each fund, each portfolio is quite different. You should really do your homework, research on how different people operate. Sorry, I was long-winded there. I just think it's such an important topic as a fund manager. So. Yeah.
Very interesting digression, so no worries. So you touched on this a bit when Peter was asking about fundraising, but we're asking specifically, or the attendees are asking specifically about profiles of your LPs, and given the crisis, how you think that's going to change in the future.
It's another really great question. It's just smart people at INSEAD.
And alumni.
So actually, VCs are not very transparent about who their LPs are, right? And probably that some of it has to do with they often tend to be passive. We took a very different tack on that, because I think it was just the necessity of starting off very small, as we did with a couple of million, then 5 million as our next fund, and then we've grown since that. So we actually, again, are extremely thoughtful about how we structure our LP base. So we have about 10, 15 angels, potentially more as well, who are going to be active in the ecosystem somehow, right? And who are actually going to be value add to our companies and therefore us. So that group of angel LPs, we go after, again, another 10, 15 plus VC LPs as well, who are going to be co-investors for us in any particular deal we do, but more importantly, probably downstream capital for us, so that we have a very dedicated pathway for our companies, and that's superior advantage in the market to be just a quick Telegram, WhatsApp, whatever away from some of these VCs, right? And so that group, and then increasingly as we've grown in size, we absolutely have to go after more passive capital as well. So we do go after family offices. Sort of corporates aren't passive, and we we have a couple of corporates that are not our bigger group of LPs because they often are very tied to a particular sector and we're very horizontal. But family offices are extremely active LPs, in terms of actually investing in funds. So that group, and then certainly the British Patient Capital or the EIF, which you can't ignore as LP base in Europe because we just don't have things like endowments and a lot of what and pension money is regulated to not to not be invested into the VC space. So yeah, that's our makeup. I think it's generally on our website as well, but yeah, it would be great if more VCs were very transparent about who their LP base is. And the crisis, it's not changing. Actually, what's interesting, for the first time ever, we've been heavily oversubscribed for our fund, so sort of by a third, and never had that happen, right? So and I always tell people we're a leading indicator of a crisis happening, because anytime Seedcamp says, "Hey, we're going out fundraising," you should absolutely be worried, like some kind of crisis it's coming. We've only seemed to raise in bad times.
Reshma, can you clarify a little bit? What size of fund are you raising currently? I don't know what you're communicating on that.
We're raising a 70 million pound fund. I think kind of Seedcamp, it's kind of in its name. I think we will always stay sub 100 million for all of what we talked about a little bit in terms of returns and what you can deliver and the risk of having 50% write-offs, right? So.
Yeah, pretty good.
Very cool. So now we're having a bit of an interesting question from INSEAD is looking for some advice. What would be your advice for INSEAD founders looking to fundraise at early stages, pre-seed and seed? What are some of the best practices and, in contrast, mistakes that you usually see INSEAD founders or MBAs in general make?
Yeah, I mean, I think I'll start with the second in terms of mistakes. I think, we, as an entrepreneur, as a startup, where the first sort of things you have to do are get traction and get someone in the world out there to download or use your app. Actions are, the doing is everything. Actions are everything. And I think MBAs tend to be a lot more analytical. And it's like, that's great. We've clearly done a lot of homework. Now's the time to actually go out there and talk to human beings and do customer. We're huge about customer interviews, and there's no time like the beginning of your company when you can literally pick up the phone and talk to your 100 users and talk to the 50 customers, and when you have 1 million users, that's going to be very difficult. So I think if some of that discipline, we really look for that discipline early on, because I do find, again, I don't want to generalize because everyone's different, but if I have to, then I find MBA is a lot more desk sort of research, right? And theoretically, users should think this and do this, and it's amazing what users will actually do in real life. So I think that's probably one of the bigger mistakes. And then in terms of raising that early stage, I think, as an INSEADer, you're in such a privileged position. Is like you've got sort of, me at Seedcamp, you've got Blossom Capital, you've got all these INSEADers in early stage VC positions, and you've got all these INSEADers who founded BlaBlaCar and Curve and TransferWise, and so I mean we pay so much attention to that, and any referrals coming in through Shahar or Tavit or Nino at Aperia, which is another INSEADer. So I mean we have a big base of INSEAD founders as Seedcamp founders. So really leverage that network, and make sure people are giving strong recommendations. I think it's not just sort of like, oh God, I'll do you the favor and I'll introduce you, because I see how those introductions come in and where, and the strength and the weakness of those introductions as well. Which, all this to say, like, you've just got to do so much work. I think it's not for the faint of heart to go down this path. So it's really like just be clever on top of everything of finding those niches and clever ways of getting to your goals.
Maybe I could follow-up question on that. Just what are different pathways to entrepreneurship? Like, so in your case, you talked about wanting to get some operating experience.
Yeah.
You don't have to found right now. What kind of advice do you give to people who are generally looking to develop this path?
I think for sure, we also pay a lot of attention to the sort of CXO level or just below that at our companies who are leaving and starting up companies. So I think that if you can get those kinds of roles, which again are action oriented and not I am chief strategy officer at something, those are incredible. Because I mean, again, you're actually doing, right? And you're actually building in that scale up. And I think a scale up is a great place to join. Probably, I think, especially for people coming out of INSEAD, Harvard, and places like that, you're going to get such a breadth of expertise, and yet, really be operational. So then if you start something or even want to get into venture capital, that's a better way to do it. And I guess, just to be honest, like, it's got to be successful. I think it's really like, you should pick well as well, where you, or even if the first ones, didn't go so well. I think, again, having a track record of picking really great places and then starting something off, it just gets the attention, right, of us folks who are sorting through, curating like 4,000 startups a year, getting to that final kind of 30 that we want to invest in.
So there's a question that's also very related to what we're talking about in fundraising, and it's around, given the cost of starting a business is decreasing and there are new funding models available to entrepreneurs, things like equity crowdsourcing and ICOs, how do you see the role of the VC investor changing?
Yeah, it's a great question. And I think, VCs that embrace this, we certainly do. I think you set, as a VC, you set yourself up for the future that's inevitable, versus the ones who block it in any way. But there's sort of smart uses of that. And so we're big supporters of crowdfunding, but I fundamentally also won't support our companies that have really not figured out product market fit, and are going to crowdfunding because they can't figure out how to raise money anywhere else. And I think that is absolutely not right for retail investor. It's just my view, retail investors to get involved in, versus when our companies either have revenue or have the million plus users. I think what a beautiful thing to bring your own customers, to become shareholders, so that you don't have to wait as a retail investor for Apple to go public. I mean, Apple's done them incredibly well, but the stock market these days is not a great place necessarily for getting into growth companies. So I think it's about matching what stage, where you're at with what you need and what you want to actually, again, provide to society, and getting that different capital in. We've actually invested in a company called Uncapped, and their tagline is like, getting rid of venture capital. And we believe that for marketing purposes. It's like, why is venture money going into spending on Facebook and Google and whatnot on your marketing budget? And so with Uncapped, you can raise that quick sort of debt funding for those purposes, so that you're not giving equity away to venture unnecessarily for what is sort of that OpEx expense, and not kind of core R&D or anything risky. I mean, you're going to know the results from any ad campaign on Facebook or such. So we're investing in that, and so we're supportive of a lot of things, and therefore the nature of VC, to the question, changes in that we go back to the fundamentals of what do we offer here. And so in some case, at the pre-seed, we tend to play a lot on our ability to bring syndicates together with institutional terms, about the speed with which we work. We can give you an answer in sort of 48 hours, whether we're going to invest or not, that leadership. So that, and plus all the support we of course bring. In seed, we play on something different in terms of being a second largest check-in, not being kind of the VC that's going to sit on your board, but what we have is a network of 800 founders that you can riff with, and they can be your customers, they can be your users. So as a VC, I think you always have to innovate and keep adding to what you can bring to the table as things evolve.
Nancy and Daniel, how about one or two last questions, and then we'll start wrapping up.
Cool, sounds good. So we've got a bit of a follow-up question to some of the things you've been talking about. So people are interested in understanding, there are some startups and companies who actually have the privilege of choosing their investors. What makes them so special? How can they command that interest?
Yeah, and that's where, that's definitely where we kind of sit up and go, we have to we have to sort of pitch to you, right? And I mean, look, I'll take Tavit as an example. And actually, they had a really tough time raising money after we even invested. But Tavit, you're like, okay, first employee at Skype. I mean, literally, kind of but he actually wasn't operational as much as Christo was, and Christo had none of the sort of startup background, right? And so I think some of that led to some of the challenges they had right after us, until Tavit sort of joined up full time. But so back to as a VC, I mean, you're making these decisions roughly kind of within 40 minutes. And then any DD you do after, you're trying to justify why you said yes or no. So it's a lot, like if you can quickly check off, green checks on these different topics, on team, background, skill, all of that, you're going through that faster, and everything you hear is this confirmation of what you already sort of decided. And so I think it is that it's, bringing in that experience of, I think if you have to take someone leaving Hopin right now to start up a company, is, hey, I was there in the first 3 years. I was the COO, or I was someone, and really helped Hopin grow from 0 to 300 people, or 0 to 100 million in revenue, or whatnot. I mean, when you see that, that checks off a lot, right? And then we particularly look a lot at founder market fit, and that's not the case. And we've gotten quite a bit, is we've had sort of men come in without kids building an app for mothers, and you're like, what? Like, are you? They're not married, and you just kind of like, maybe they'll get it right, but you know what? Yeah, that makes no sense. And we've gotten burned with successful founders in one thing, trying to go after something totally different. And we've been like, wow, so-and-so did this or that, but they had no market fit to what the next problem they were solving. And Rare is a Kevin Ryan who can, do that over. Rare is that person who can do that over and over again, right? So we look a lot at founder market fit. Does it make sense what you're even, who you are, to go after what you're trying to do. But definitely a lot of what you've done can command some of that, but also even we backed 25-year-olds who command that. And again, I think that's probably has to do with what did they do when they were 14 or so it may not be a job, but I mean, like we had a team the other day telling us how each of them were pretty like law-breaking hackers, and I was like, that's really interesting, and we invested in them, because they're turning the page on that. But it's just something where you're like, okay, there's some high impact thing you did, and that often commands the ability to choose what investor you want to get into your round.
So Reshma, I'm going to start wrapping us up with maybe a few rapid fire questions. Don't need to go deep, but one thing, just finishing on what you invest in, one thing we didn't talk about is we've had all these waves and waves of digital technology, whether it was sharing economy with BlaBlaCar, but now VR, AR, IoT, 3D printing, whatever, all the obviously ML stuff. To what extent do you guys take a position on those technologies that you think are promising or not, and focused attention, or are you kind of technology wave agnostic?
I think it's a combination. We're roughly agnostic. We let the kind of market and markets comes after, but let the talent kind of speak for what some of the trends are. That said, I think our positioning, being able to do 30 plus investments a year, enables us to take multiple bets or multiple views on any one sector. And so within health tech, we've taken, everything sort of hardware related, all the way to pure kind of ML related to bets, to in fintech, et cetera, et cetera. So yeah, and I think some of our investments in other sectors inform us as to what's possible. I think fintech particularly informed us on health tech. So the fact that you could have severe disruption in a regulated, complex, oligopolistic kind of, sector gave us the courage to invest in health tech, and then take some of those early bets to say things will move in a similar direction. And sure enough, it's doing that. So yeah.
So 2018, 2019, huge amount of excitement around data analytics, especially around ML. How do you see that going forward? Still with lots of momentum, or some reality creeping in?
And I think well, lots of momentum. I think if you didn't surround yourself or immerse yourself in the right ecosystems around ML, you get burnt as a VC for sure. And I think we're privileged to be in London, where UCL is a massive center of gravity for that, and obviously sort of Cambridge as well. But I think if you're sitting sitting randomly somewhere else and somebody comes out with ML, yeah, you probably got burnt. Actually, I wanted to mention two books from Yuval Noah Harari, Sapiens, and I mean Homo Deus. Like, reading that, I'm like, oh God, are we part of the problem here? Because I was definitely investing in a bunch of things. He talks about sort of upgrading of human, but it's a natural evolution of what humanity wants. I mean, definitely reading a bunch of that stuff to see what the future can look like. And,
well, maybe let's go there. Also, that was one of the things I wanted to at least touch on at the end, which is, again, if I think of the last couple of years, there have been increasing rethinking of the role of business in society, and a lot of challenges coming up. Tech getting more and more at the center of that. How, for you as somebody in the middle of tech, how much do you think about, hey, what is the role? How much are you part of the solution versus part of the problem? Just a little thoughts on how you're making sense of that.
Yeah, I do. I think it's a big challenge, and I imagine we fall on both sides of that. To be honest, I think some of the things we mentioned about getting getting particular groups back into work or into work and skilling and all of that, I think on a good side of that. And then the automation is scary. And that said, a lot of automation right now is of rote. I mean, that's how the automation works well. It's at a stage where it's a lot of repetitive rote work that's getting automated. So people associated with that work do have time to do more of the thinking work. But I think that's a slip. I think we're aware that that's a potential slippery slope from that to Ezra, which is enabling kind of AI to work on detecting 11 cancers in the body, right? And so, what is the role of a radiologist there? And I don't think we have the answers. I do, again, I hope that some of the things we read and conversations we have will all, build better solutions. But yeah, I think the nature of tech is we all fall on both sides of
Okay. All right, maybe a final one, just on, two-part question. One, a little bit about maybe some reflections on what your experience at INSEAD has brought to you. You've already touched on it some, but then building on that a little bit, what advice do you have for current students? You're somebody who came out in the shadow of the dot-com bubble. You were building Seedcamp right going into the financial crisis.
Yeah.
I don't know, just anything. Words for resilience, I guess, Reshma.
I think, to me, the two fundamental sort of experiences that stand out career-wise are certainly UPenn, my undergrad, and then INSEAD for sure. Out of any experiences, they're just so concentrated. And for me, INSEAD was the gateway to Europe. I didn't even think of settling here, but here 16 years later, or 18 years later, and so clearly going from zero network to 400 or 500 people, and every day, like people, my INSEAD friends, and we connect up, and helping one of my INSEAD friends who's moved to Australia kind of get into the fintech sector. So I just think, yeah, it's just been incredible. But because you had sent the questions before, I did think about it. It really is individual in terms of what you make of the opportunities, given to you, and sort of how you waste or not waste that. And I just think if you're in school right now, remote school right now, be very thoughtful about what are the opportunities that can really leverage and make that time useful. I would say, actually, I probably had too much fun during that INSEAD time, but I think I really leveraged it much more kind of post post INSEAD, and we have such an incredible alumni network. So I think and it connects across sort of generations. So I think it comes down to you as a person and what you're going to do with it. So.
Cool. What makes you optimistic about the future?
I think, it was interesting. I was watching Kevin Systrom talk about kind of Instagram's impact and about George Floyd's death, and would we even know about it if it hadn't been on social media? So I think and it's true. And I think, social media gets such a bad rep for so many good reasons right now. But then there are those elements that, as disturbing, they've brought up an issue to the forefront that absolutely needs addressed, and it's being brushed under the carpet ever since the civil rights movement. And so we have to address it, and it's not going away. And that's, so that makes me optimistic, even though it's a terrible time. People are getting hurt as well during this time. But I think I'm optimistic that a bunch of these big issues, will get towards solving, maybe not the perfect solution. So I think I think in that negativity, there's a way to build a different future outcome. And I think, pandemic as well, we look at is like, gosh, I can save so much on my environmental footprint by, not traveling to all these potential conferences and things. So I think that, and I think we see it in our entrepreneurs who are coming up with some awesome solutions to tackle, climate change or other areas.
Great. Well, Reshma, thank you for taking time out of this week to spend with us and the students and answer all the questions that came through.
Pleasure.
Daniel,
obviously, I'm hoping some of those founders will come to Seedcamp for.
I'm sure you will see some deal flow in the months and years ahead.
There you go. Super. Thanks so much.
Take care, everyone. And this wraps up. We will be back with more opportunities possibly over the summer. But this wraps up the series for May, June. Thank you, everyone.